everyone, I recently talked about our decision to refinance our home mortgage to get out of our FHA loan into a conventional loan with no PMI and a 15-year term. That decision's super exciting, and since I had a lot of questions about refinancing, I figured I would do a video about what we had to provide in order to refinance our home, in case any of you are out there wondering if you should refinance and what you're going to need to do so. Hi, if you're new here, my name is Mary. This is Pennies Not Perfection, and we talk about all things personal finance, from home buying to budgeting to investing for our future. I have a whole playlist about how we bought our first home, from the actual home price and what we paid and the closing costs to the tips that we used and the things that we did right and the things that we did wrong. So I've shared the whole journey of our experience so far, and I love talking about the refinancing now because it is something that is going to greatly speed up our ability to pay off our home. So if you have a loan that you got just to get a home, but it's not the best loan for you, or you're paying PMI and you don't want to anymore, or you want to switch from a 30-year loan to a 15, you probably want to refinance. Let's go over the things that we had to provide for our loan in order to refinance, and then I'll share a few things that we personally did not have to provide, but you might have to provide for your refinance. First, we had to provide 2 years of tax returns. We had to provide the last 2 years of our tax returns to show our income, what we deducted, our full income and everything, so that it matched what is shown on the next thing that we had to provide, which is 2 years of W-2s. We both have very stable employment, so this wasn't hard for us. We just sent the last 2 years of W-2s from our companies to the mortgage company for underwriting. If you've changed jobs or had to have multiple jobs and had multiple W-2s, you'll have more to provide on this step, but you'll just have to provide the last 2 years of payment information from the company that paid you. We also have to provide the last 2 final paychecks of the year from our companies. So we had to give the pay stub of 2019 and 2018 for our refinance in 2020. This was just another way for them to verify that the money from our company shown on the tax return and our W-2 matched what was actually coming into our account. For the more recent financial information that the mortgage company wanted, we had to provide the last 2 pay stubs that we got from our companies. This is just to show them that money is coming into your account from the employer and it's something that you are being paid currently. We also had to provide 2 months of bank statements showing money coming into our account and money going out of it. They are going to look at this to see that money is coming in and out and that you're able to pay the mortgage that they're about to give you. This is something that is super important when you are considering how you're getting your finances in order, either for a home mortgage the first time or for a refinance. You're gonna wanna be doing the things personal finance wise that make sense. So spending less than you're earning, so you're saving money. These are things that a company is going to look for, and that's why they're asking for your bank statements. They want to make sure that you're not spending 2 times the amount you're actually bringing in and going into the hole every single month. We also provided 2 months of our retirement statement savings. This is something that you may or may not provide. It's just they want to see you have assets, so they want any sort of documentation from companies that where you have either savings accounts or retirement accounts that are another form of money sitting around in your name. Finally, we also had to provide our current mortgage statements. So they wanted our current mortgage statements so they could see what we're paying for our actual payments. So they wanted to see our current mortgage statements, which will verify the loan balance and what we're paying. Also the information for the insurance and taxes that we're paying into our escrow account currently. So that's what we had to provide upfront when we first applied for a refinance. That was all the information that went with our original loan application so that they could verify the very basics, that we have income, that we have this loan, that we have money in our bank account, so that we are eligible for a loan. With our loan application, we also had to provide our social security number so they could check our credit. Credit is so important when you're getting a loan of any type. So of course, they're going to pull our credit for this application. So that was all of the stuff that we provided in the beginning for our actual application for the loan. Next, we moved our loan into underwriting, which is where they ask follow-up questions, and we had to provide a few more things. I'll share what we had to provide so you might have an idea of what you may end up providing. Some of these are very specific to our situation, but they give you an example of what might be asked from the company underwriting your loan so that you know what to expect. First, we had to provide a letter of explanation on why our credit was checked a few weeks before we had this application in. That was during our mortgage shopping period. So generally when you first apply for a credit check to get a mortgage, you are going to have a certain number of days, probably about 2 weeks. It depends, like a month. And that is a period where you can shop and have your credit checked multiple times, but it doesn't negatively affect your score like it would if you were getting your credit checked every month for a new loan. So with this, we had a company that we didn't end up using check our credit about 2 weeks before we had the company that we did use check our credit. So we just had to write a letter explaining that this was during the mortgage shopping period and it was for the same credit product that we're getting, the new refinanced loan. Next, we had to provide a letter that said we were approving no appraisal on our property. Because the appraisal was being waived for our particular refinance, we had to just sign that we were okay not getting an appraisal to get the full value of our home. They waived this fee, which dropped our closing costs, and we knew that our home was worth more than we would even probably get it appraised for, so we didn't feel that was necessary, and because they were dropping the requirement and would save us hundreds of dollars anyway, we signed that waiver. You may have to get an appraisal, so you may have to sign a letter saying you want the appraisal, or you may have to find the person to appraise your home yourself, or they may be sending it for you. That is something that they will figure out during the underwriting process, because getting an appraisal on your home generally is part of the refinance process. But sometimes, like for us, you get that waived if they are a bank that knows you, or you have really good credit, or your home is just obviously so far ahead of the actual value compared to your current loan. And the final thing that we had to provide during the refinance underwriting process was a letter from my company that employs me explaining why the paycheck does not match the company name. I work for a business that is part of a holding company, so I just had to get a letter from the owners of my company explaining that, yes, the paycheck may say this, but it is part of this business. And that's all they needed, just to verify that I was being paid by a real company, not just a weird name on a paycheck. So that is what we had to provide to get our home loan refinanced. There are a few specific things we had to provide, but in general, to get a good refinance, you're just going to have good credit where they can check your credit. You're gonna have to prove that you have an income, just like when you got a mortgage the first time. And you're gonna have to be able to prove that your home to value of the loan. And you're also going to have to prove that the home value to the new loan ratio makes sense, so you don't have to have PMI if that is one of the things that you're aiming to get dropped. And of course, you'll have to provide all the documentation to prove those things, which is like the tax returns and the W-2s and the paycheck stubs, all of those things that prove that you have income, prove that you have a loan, prove all of the things. It's a lot of proving to go on to get a mortgage refinance. So that's what we had to provide for our home refinance. We're very excited about our home refinance. You can watch all of the reasons why we decided to refinance our home from our original mortgage. And hopefully that gives you an idea of why certain people decide to refinance and the things that you have to look for in order to decide if it's worth it or not for you.